Hello guys, you're welcome to IPCFX Institutional Price Concepts. If you want to be trading like the banks, JP Morgan, the hedge funds, and like the institutions, kindly stick to this video, watch it to the end. Okay guys, today we are going to analyze US oil together, which is the WTI. We are going to analyze the market, the trade breakdown, our strategies, our analysis, and our entry point. All right. Don't forget to subscribe to my YouTube channel, and also don't forget to like, comment, and share this video to other traders. We have US oil. This is on the daily time frame. You know, our strategy, we go to the daily time frame because we are what? A day trader and what? A swing trader. So this is US oil on the daily time frame. You can see the market is in a downtrend. We have what? We have lower low, lower highs, equal lows, equal highs, and we have what? A new lower low and lower high, lower low, lower high, and lower low. All right, guys. So this is a downtrend, and whenever the market is in a downtrend, what you have to do is what you look for: sell opportunity. If you don't buy when the market is in what? In the downtrend, never buy. That is what our strategy. That is what IPCSX is telling you guys, that this strategy is what? Understand the overall direction of the market. Understand what? The overall direction of the market. Once you're able to identify the overall direction, then you have solved what? 90%. So this is what the banks don't want you to know. This is what the hedge funds don't want you to know. All right, so let's go down to the 4-hour time frame. As you can see, I've already marked what? The lowest point. This is the lowest point price reached, right? Before what? This move to the upside. So once you see what? A lower low, what you're expecting is what? Once you see a lower low, what you're expecting is what? A lower high, right? Once you see a lower high, the next thing you are targeting is what? A what? A lower low, right? But as a trader, you have understand that okay, the market is in what? A downtrend. Now you're looking for selling opportunity, right? Let's say you were supposed to sell here because one, we have a resistance here before, and price came back to test the resistance before coming to the downside, and in which we can use our Fibonacci from the swing high to the swing low. You see, when price gets here, the 618% Fibonacci was rejecting the price at this point before it pulls down. But that is not what we are going to analyze today. Now we need to understand the current trend of the market. What is the market doing? Is the market still bearish, or the market has reversed to what? Uptrend? This is what we need to know. As a trader, you need to catch the trend early. You catch the trend at the bottom before the price will skyrocket. You're already what? Got inside the trade and following up with a new trend, the new direction. All right, so this is the lowest point. Here is the lowest point which price reached before giving us what? A lower high, and we're expecting what? A new lower low. But price did what? Price failed to break below here. Price failed to break below here, which is it's telling us that okay, this is the bottom. This is the bottom of the market. Listen to the upside. As you can see, this is where price was ranging. Yeah, this is where price was doing what? Ranging on the what? 4-hour time frame. So after you understand that okay, this current trend has switched from what? From bearish to what? Bullish, right? But you don't have to buy instantly because you don't know if the market will keep what? If the market will keep ranging like this. You don't know if the market will keep ranging like this. You don't know how long. Sometimes it might take 2 weeks, 1 month, 2 months, 3 months. keep ranging like this, right? So you don't want to be trading in a ranging market. You don't want to be forcing any trade, buy at the bottom, sell at the top. You don't need it. You need what? You need to catch the full movement of the trend. If the trend wants to go bearish, you need to catch at the resistance and hold your trade to play out fully. If you want to catch an uptrend, you buy at the bottom of the new trend so that you can do what? Follow up and have a maximum profit to cash and a lot of pips in the new trend. All right, let's say this is our current market. Let's say this is our current market. Yeah, let's say this is our current market, right? The current trend. Let's say this is the current trend. What you're seeing, this was a what? A resistance which was kicking price to the downside. See, whenever price gets here, yeah, it goes down. Whenever price gets here, pulls back. Whenever price gets here, it pulls back. Whenever price gets here, it pulls what? Back. But now price finally broke above it, right? This is the indication I'm telling you guys. That is why IPC concept is very, very simple. IPC concept is what? Very, very simple. You don't need to be complicating things. Now you have what? Your indication that, okay, since price was like selling below here, price was selling below here, also here and here, but price broke above. Not just like this and retest. It broke above and giving us multiples of bullish candles, which is okay. It's giving us an indication that okay, here is what? A new higher high. Price has given what? A higher high. So once you see a higher high, what you're expecting is what? A higher low, right? You're expecting what? A higher low. But you don't know where this higher low will reach. Will the higher low come here? Will it come here? Or will the higher low keep breaking down? You don't know. This is a plain chart, no indicator. Now you don't know where the higher low gets before giving us what? A new what? Higher high, right? Because if the market is in an uptrend, what you see what? A higher high, higher low, and what? A new higher high, right? This is where you have to apply your IPC concept, which is take your Fibonacci tools from the swing low to the swing high. From where? Your swing low to the swing high. So this is the lowest point. This is the lowest point. Here was the lowest point before price pulled towards to give us what? A higher high. As you're expecting what? A higher low. After the higher low, what you're expecting next is what? A new higher high. So this is where everything gets interesting. Now, you don't only buy, like I said, you don't only buy on the Fibonacci. Price might just come and wipe all this, start dumping. When price gets to your Fibonacci retracement, you don't just buy immediately. You wait for price what? Reaction. And you need what? You need confluence. So let me move the Fibonacci tools and let's do a plain chart analysis before we bring in our tools. Here is what? A resistance. A resistance, right? Resistance is here. And you are expecting this resistance to become what? A support, which is price will keep buying from here to the upside, right? So now you need a confluence to align with your strategy, your criteria to form. You need what? Your criteria to form so that you can be able to have the confidence to take the trade. So we have what? We have a support under here, which is a resistance become what? A support. We have a support under here. So let me take this. And don't forget, this is what? An order block. This is what? An order block. This is the last bearish candle before this move to the upside. This move to the upside. So this is what the other block. Now you have identified that okay, this is a resistance, becomes what support one. You understand that this is an order block two. Okay, so now what you need now, you need to take your Fibonacci retracement tools from the swing low to the swing high. You take from the what? From the swing low to the swing high. So you see your Fibonacci percent 0.5 falls at this zone where your order block is, your support is, your resistance is. Also, your Fibonacci 618% falls inside the zone, because if you want to mark your support and resistance, this is just an. So let's mark the resistance becomes what support. This is the zone you're looking for, where to buy at this zone. This is where you're looking to buy. So this trade, this analysis today being 15th of January 2026, I will be making an aggressive entry for this trade because all my criteria, all my analysis is what entered. So what I'm expecting now, I'm expecting this is a 4-hour time frame. My entry is on the 4-hour time frame. I don't take entry on 1 hour or 30 minutes or 15 minutes. I don't take all this entry. I take entry for where? From the 4-hour. So my entry is here below the order block. My stop loss is here below the support. This is below the support. So my first take profit be this equal high. Yeah. My first take profit should be this equal high, which is over 370 pips. My second take profit will be here the Fibonacci extension, which is 545 pips. So I'll be risking what? I'll be risking 95 pips. I'll be risking 95 pips to target what? 545 pips. Come on, guys. This is a very huge risk to reward. 1 to 5. Maybe you're risking $100, you'll be having $500. You'll be risking $1,000, you'll be having $5,000 profit. You'll be risking 10,000, you'll be having over 50,000. That is how it is. So don't forget, our analysis is telling us that price just did what? Give us a new higher high. We are expecting what? Higher low. After the higher low, what you're expecting is what? A new higher high. So IPC concept, this is the technical aspect of IPC concept. Fundamentally, we are bullish. Currently, we are bullish on oil. Technically, we are still what? Bullish. If you can see, like a lot of traders, like the trend line traders, you see they will be drawing that trend line. You see, this is a trend line which price broke above it, giving us an indication that okay, this is what? A new higher high. You're expecting a higher low to make what? To make a new higher high. So guys, expect oil, US oil WTI $640 per barrel. This is what my projection for US oil today. So this trade is not an instant take profit trade. You might see a couple of days, but the overall direction will never change. That is just how it is. The overall direction will never change. Maybe news can just come in, or headlines can come in from Donald Trump, which will just push the market. This is a 4-hour time frame. Don't forget, this is 4-hour time frame. Push the market to our entry, then reverse to the direction. This is the new direction oil is going. All right, guys. So if you're first time coming across my video, kindly subscribe to my YouTube channel, like this video, comment your favorite pair, and also don't forget to share this video and hit the thumbs up notification, so whenever I drop a video, you will get a market update and a market breakdown. All right. Love you guys. See you in the next video.